Okay, so welcome back to my channel. If you watched the first video, great. You're now on to part 2, which is going to cover basic concepts. If this is the first time seeing my video, that's cool. You're looking at quite a good video. This is going to cover some of the basic concepts you need to progress forwards in your trading careers. But I would recommend watching the first video just because it's going to set a little bit of context on me. Because you can't see my face, you don't know who I am. I tell you about me and my motivations in the first video. So, also at the bottom of the screen is my Instagram name. Really appreciate a follow on that. It's probably the best way to get in contact with me. I'll always reply to your messages, and there's quite a lot of good content on my channel. Yeah, if you want to go and hit me a follow on there, message me as well saying you've just seen my video. I'd like to actually see viewers are interacting between different platforms, so that'd be great. Okay, so let's move on to the first thing. The reality mindset. This is something that I wish I'd have thought a little bit more about when I first ever started trading, because I went in with the wrong expectations. I thought, okay, I'm going to make 30% a week, that's going to be easy, because you see all these millionaires with Lamborghinis and everything, that's what I wanted to do. But then the best thing to start off asking yourself is, what would a bank provide you with? If you went to, say, your local bank and you put your money in an account, what percentage gain would you get from that? Likeliness is you're going to get maybe 3 to 5% a year. I don't know the exact numbers, don't hold me to that, I'm not a banker, but 3 to 5% a year, that's probably about right. Now, trading conservatively and safely, as I do, I can make, or shall I say, I average maybe 2 to 3% a day. So do the maths, that's 15% for the week maximum, okay? So already in 1 week you've made more than you would if you just let your money sit in a bank account. The only downside is in a bank account it just sits there and it works for you, it gets you a little bit of money. This you're going to need to be actively working, staying motivated, putting the time and effort in to actually see a return. So what will your weekly and monthly return be? Well, we've just said on average a safe amount to work by is 2 to 3% a day. So even if we go off the lower number, even 1% a day, if you're making 1% a day, which is relatively easy. Now, don't take that as you're going to jump in and do 1%, but in terms of a target, 1% is quite achievable with just maybe one trade, okay? Next question, will you be constantly trading? Answer to that is no. I'd say 80% of the time you're going to sit about looking at your screen waiting for price to come to your entry levels, which is again, like, it's a lot of waiting about. What I recommend you doing in the future is having something you can be doing while you're waiting. Like for myself, I'm at university, like I said in the first video, part 1, so I spend a lot of my day actually studying, revising or completing different tasks I've got to do for uni, and then the actual waiting of the charts is not so bad because I'm doing other things in between. And that comes on to the last question, what is trading like on a daily basis? If you was doing trading only and you was staying disciplined to your own rules, you're going to find it very boring because, like I said, you're not actually doing anything most of the day. You just sat waiting. And you'll often find, which we'll talk about in a bit, is that you're not going to be taking many trades a day. You're going to take maybe 1 or 2. So you can see why it could be classed as quite boring. Okay, so let's just have a quick run through. The aim of Forex Scalping. We briefly touched on this in the first video, but I'd like to just reiterate that in scalping, we're not looking for them huge moves. You know, when you see screenshots on Instagram of traders getting absolutely ginormous moves from point A to point B, making £10,000. We want small fractions of these large moves. So if I was to okay, so let me bring up a chart and I'll show you, okay? So we're now on this chart. If we just switch over to, say, the daily, and let's just, I'm going to just put a box around this here, okay? We're not doing any analysis, I'm just showing you, I just want to show you what I mean by this. So I put a green box around this move up here. We don't want from this point here to this point here. We want to just say, let's see how big this is. Okay, so as a unit it's 121 pips. We want maybe 10 to 15. We want to catch trades that are 10 to 15 pips, so that's just a little over 10% of the size of this moves. 10 pips would be less than 10%. Okay, so we just want small amounts, because the reason we're doing that, rather than trying to get the whole thing. 1 second. Let me just go back to my other screen. Okay, yeah, so the reason we want to do that is because the chances of us actually catching them small moves and hitting targets and grabbing profits from that is much, much higher than if we want to catch the whole thing. If you look at it from a probability standpoint, you're more likely to survive taking small moves, and which are quite reasonably easy to grab because you're only staying in them for a short amount of time, than trying to catch the whole thing. Okay, so hopefully that makes sense. You should make some notes on that. What else are we going to do? We're going to secure profits frequently. So that ties into the first point. We don't want to hold trades in profit for like 3, 4, 5, 6 hours. We want to be taking profit off constantly so that we're securing money. We've got money in the bank. By doing that, you're ensuring that you're going to survive in this market. Even if you take a small amount of profit off, that means you're getting profit. You're getting more than you started with. You don't want to leave it to go up to an amount of profit and leave it running for you to go away and come back in 3 hours and it's actually turned all the way back round and gone from profit zone into negative zone. That is the worst thing you can possibly do. So keep that in your head. Whenever you're in a trade and it's in profit, always be considering taking some profits off the table. Not all of it. You can just take some, just so you're securing something. Okay? Right, as a scalper, we're also going to actively monitor and manage your positions. So unlike swing trading, where you're going to be sat in your positions and you're just going to let it run and see if it hits your target over, say, a week or a couple of days or a week, we're going to be watching maybe every hour and seeing how candles are closing. So individual candles on the chart, we're going to see if they're still moving how we want them to ensure that our trade still looks valid in our eyes. Okay, and that tells us what I mean in this last point. So closely analyze individual candles to deduce what is happening. So when I say that, what it means is if you're buying a position, you want to see candles are going green in your direction. They're closing bullish, so they're going green. That means your trade's still moving in the right direction. What you should do is if you see candles start to turn around and go in the opposite direction, you should be considering closing your trade and taking all your profit, or at least taking some profit and making your position risk-free. Okay. So that's 4 quite important points to remember. Now, times to trade. As a scalper, we're trading within the day itself. So there's certain times within the day when there's the largest amount of volume. And what I mean by volume is, on a simple term, you can write this down. Volume means big movements. So when you see them large candles on your chart, or you see the candles are moving in one direction with quite a lot of weight behind them. When you see candles moving sideways, so let's pull up this chart again, and go over here. Let's have a look on the 30-minute chart. So let's have a look. Okay, so in places like this right here, I consider that not a lot of momentum, there's not much volume, which shows that they're moving sideways. However, places like this, let's have a look at this here. This is a large move up to the upside, and this is what you consider like quite a lot of volume. So there's a lot of weight behind the candles. Okay, so that's that reiterated. So if we go back over here, winner capture. Okay, so we're now back on this. So yeah, there's 3 main sessions you have to look at. There's the London session, this is in Greenwich Mean Time, by the way, so you need to convert to your own time zone depending on what it is. The London session runs between 8 AM and 4 PM. New York session runs between 1 PM and 10 PM. And Asian session runs around 12 PM till 9 AM GMT. Okay, now my favourite time to trade is 1 PM to 4 PM GMT. Why is that? Well, because that's a crossover, which means that there's 2 sessions open. So all the people in like the Euro session in London are overlapping with the traders who are making big moves in the New York session. So overall, you get an an influx of volume. So that's when you can easily catch your big moves and secure your profit quickly, because you don't have to wait around for too long for targets to be hit. Okay. So moving on. How many pairs should we be trading? You want to stick to no more than 2 pairs. Like, reason I say this is because when you start moving on to a big full list of currency pairs, that's when things start to get a little bit complicated, because you don't actually know. It's harder to monitor what each one's doing. But say if you've only got 1 or 2 pairs, you can almost keep your eyes on them easily. It's like if, let me put it into a way which is a bit easy to understand. If you've got 10 children as a parent, it's quite hard to keep your eyes on all of them and know exactly what each one is doing at all times. Do you know that they're safe? Do you know what they're doing? Whereas if you've only got 1 or 2, it's easy. You've got 2 to control. That's how I like to put that. Okay. Now, what else should you be doing? Well, each currency pair you have, you should treat it like a personality. Treat it like a person. Not that you're going to talk to it, but I mean, each currency pair is going to move at a certain time. It's going to move in a certain way. It's going to move with a certain amount of volume, and each one's going to react to zones or levels in different ways. So what you want to do is stick to one single pair and trade that for maybe 4 or 5 months, and master that pair. Become familiar with it. Make sure you know exactly how it moves, when it moves, and why it moves. Okay? So you can just keep that. The best thing to do that is just get one single pair on the charts, and every day just focus on that one pair. Don't go to any other. Right, the last thing. Okay, so it says here, which is very true, the biggest change I made that helped me reach consistency. This is 100% true. I used to try and trade 12 to 20 pairs. I had them all listed down the right hand side of my trading view, but I now have 2, and let me show you. So if we go over here and I go on to trading view and I show you this here, this right hand side here is my 2 pairs. So I've got GBP JPY and Euro JPY. Okay, but if you've got a big long list of this, good luck to you trying to keep track of what each one's doing. It's just so much easier to just have 2. And trust me, you'll see so much more consistency if you learn just 1 or 2 pairs. I started with Euro JPY. I'm basically at a stage now where I can trade that super consistently. So then I actually started moving on to GBP JPY, and now I've got 2 that I can trade. So that just increases my potential. Okay. Right. So let's move on. So I hope you've made a few notes on that as well, because again, that's another important slide. Them 4 things there, they will really increase your chances of being successful. It's nothing special, it's just a couple of rules you need to stick by to make sure you increase your chances as much as you can. Now, top 5 things you should be doing. There's a million videos on YouTube teaching you how to do these things. I'm not going to teach you how to do them. I'm just going to tell you what you need to be doing. It's up to you to go away and find Google how to do each of these things, or you can message me privately and I'll give you advice. But we're not going to put a full video on each of these, okay? Now the first thing I'm going to say is you need to create a trading plan. So what's a trading plan? Okay, so imagine you was trying to learn a new sport, but you'd never played the sport before, and you've got no access to the internet. Now, what would you need? You need to put a plan in place to make sure that you can learn, you can stick by the rules, and you're successful. Imagine you've never seen anyone play it before, and someone handed you a piece of paper with loads of rules on. You could read them. As long as you stuck to them, you knew that you was going to be playing the sport or doing the sport in the correct manner. So that's what the trading plan kind of is. And on your trading plan, for example, you might have what currency pairs do you trade, what time frames do you trade, what time of the day do you trade, what are you trading? Are you trading indicators? Are you trading price action, candles, trend lines, support and resistance, moving averages? So that's the kind of things. It's just a set of rules you have in place that are going to keep you on track and keep you doing the exact same thing every single day. Okay. If anyone wants a copy of my trading plan, I don't mind sending them that. Just message me. Mine's changed in the past 6 months. I mean, it is something you develop. So what you'll do is you'll get one trading plan. You'll test it for 3 or 4 months. Did it work? Well, yes, no. If it didn't, okay, now you need to review what didn't work on it. Adjust it, test it again. And then eventually you're going to get to a stage where you've changed enough things. I don't mean change it every day. You need to give it time. You need to do it for a few months and then be aware of what needs adjusting. Okay? So then the next thing, create a trading journal. Now this is a very important thing. Like every single trade you ever take needs to be documented somewhere or somehow, because the best way so you're going to learn from failure. I need you guys to fail when you're practicing in the first place to understand what you did wrong and how you can adjust to do it right. So let me give you an example. So let's see my trading journal. This is from last week. Okay. So as you can see, I've got on my trading journal the date I took the trade, the pair I traded, the position I took, so long or short, or buy or sell, whatever you want to call it, the reason I entered. So that's really important because you need to know what your eyes were looking at that particular time, what caused you to get into that trade, and then a screenshot. So if we open my screenshot, I've got a screenshot of my trade I took. It's labelled, so I've got a resistance there, a support there, my entry candle, my position itself. So that means that if I go away in 3 weeks and I come back to this, I can use this to see, okay, there's a trade that's kind of looking similar to this sort of setup. Did it work last time? Yes or no? Okay, so if it worked last time, you know that's quite a good setup. But then, so that's how you look at it for wins. But then there's losses. So I've got 2 losses here from last week. So let's have a look. Let's do an example. So I've got my trading plan. Wait, let's read it first. So it was a sell position on GBP JPY. Previous 4-hour bearish with wick to fill. 30-minute close bearish at previous support and resistance, and clean draft down to the left. So this was a loss. So let's have a look at it. Okay. So I was trading this. I saw that we was moving downwards. I saw that price had come up here. So it was moving up. It was moving up. A bearish 30-minute candle closed, and this bearish 30-minute candle broke the previous low. So I took a sell with my stop loss above this bearish candle with a target down here at the next support. Now, this didn't work at all. This went straight up, hit my stop loss, and I took a loss. So then I have to say, okay, why did that not work? Now I think because this was on the 30-minute, what I would say and what I came to the conclusion from this trade is this 30-minute bearish candle wasn't enough considering the momentum we had to the upside here, because we'd got all these higher highs and higher lows forming, and one 30-minute bearish candle wasn't enough. But then if we also look, this resistance, support resistance I had marked on, it didn't even pull that far up to it. It didn't touch it enough. So a better entry would have been, or at least a safer one, looking back, would have been waiting for it to pull up further to then take my entry. So now I know for next time, I can look at this trade and say, that didn't work last time, so then I can recognize it in the future and say, I'm not going to do it again. Okay? So hopefully that makes sense. So let's go back to the presentation. Should get rid of that. Okay, so what are we on to? Okay, you need to interact with others. There's no point sitting at home doing your trades, taking a win, taking a loss, going the next day, and never ever talking to anyone. There's people like myself on Instagram that will help you for free. I'm doing these YouTube videos for free. I will look at your charts and review them and give you feedback. And there's hundreds of others out there that will do that. So you need to interact with people. Reach out to people on Instagram. Reach out to traders that you like their style. Reach out to me. Say, hey Josh, I've just took this trade. It won or it lost. Can you just have a look at it? And I'll have a look at it. I'll send it back. I might even put some notes on it myself and say, okay, you might need to do this next time, or do this. So that's a really important thing to do. Next thing, you need to stay focused. You need to expect losses. I took 2 losses last week, 2 in a row. Guess what? it's Monday tomorrow, I'm going to be trading again tomorrow. Them losses, I really don't care about whatsoever. They're just part of the natural game. This is part of the process. If you don't lose, you're never going to develop. If you really need to lose some trades to see what didn't work and how you can improve. And at the same time, if you win a trade, you can't get overexcited about that, because then that boosts your ego. You get overconfident. You think, oh yeah, I've won 4 trades in a row. I can keep trading. I'll take another trade and another trade and another trade. But the thing is with this, each trade is statistically independent of the previous one. So what does this mean? So if you take 5 wins, that does in no way, shape or form mean that the next one's going to be a win. That next one could be a loss, because even though his analysis is great, the market can do what the heck it wants. If that wants to go past your candles, it can go past your candles. It will not care, and it's got no mercy, I promise you that. So don't get excited about wins. Don't get sad by losses. You need to stay in a neutral frame of mind with no emotions whatsoever. Okay? Last thing, you need to be patient. This is a marathon, not a sprint. You're not going to get a Lamborghini next month. You're probably not going to get a Lamborghini next year. You're probably not going to even start making money anytime soon. That's the brutal truth, unfortunately, with this. This is something that's going to take time. It's going to take motivation. You're going to need to watch videos over and over again. Hopefully you watch mine. That'd be great. You're going to have to ask questions. You're going to have losses. You need to lose money. So whether that be on a demo account or real account, that is the only... By taking these painful losses, you are going to become a better person and a better trader, because you're going to be more aware and prepared for next time it happens, or prepared for how to not do that same thing again. Okay? So they're the top 5 things. I hope you've made some notes on them and all the previous slides. I think that's really important. These 5 things at the end, you need to screenshot this, stick it on your wall, and consider it every time you open your charts, every single day. Okay? Part 3 will be coming up, probably, well, maybe tomorrow, maybe Tuesday. I don't know if I'm going to be busy with uni work tomorrow. But next time, part 3 is going to be understanding structure, so we're going to actually start looking at charts. So I do apologise that a lot of it's just been me talking, a bit of theory, but you've got to understand that this is a very psychological process. You need to be in the right state of mind, you need to have the right information behind you first, you need the reality checks to start. But the next video, we're going to actually open up some charts. We're going to look at Euro JPY and GBP JPY, and I'm going to show you exactly how I approach them in the morning, how I start making sense of the actual patterns and structure, and I'm going to show you some examples of previous trades I took based on structure. So be sure to stick around for that, but in the meantime, please follow me on Instagram. My Instagram's at the bottom of the screen. Please subscribe to my channel if you're new here, give it a like, and please give me some feedback. If these videos are helping you, if they are working for you, if you like listening to my voice, if I'm talking too fast, anything like that, I really appreciate any feedback you've got. So until next time, trade safe, enjoy the rest of your weekend, and I will speak to you soon.